Right, let's get some insight into what's happening in the gold and copper market. Joining us from Perth is Mark Connelly, the non-executive chairman of gold and copper exploration company West African Resources. Mark, does the fall in gold prices have you reconsidering your investments in Mali or Burkina Faso?
No, I don't think it does. I think it just means that we need to look at other opportunities for those investments with respect to the cost structure that we have.
And in the oil industry, more than $200 billion worth of projects have been shelved. Are you finding it difficult to raise money for projects?
I think if the project warrants investment, I think it clearly. There is available capital both from traditional debt financiers and some forms of equity, plus private equity as well. So I think it's not without its challenges, but I think on the merits of each project, it's certainly still doable.
So where do you see the price of gold in the next 12 months or so?
Certainly in the last 12 months, I don't think anyone's been able to call the price of gold. So I wouldn't claim to be an expert, that's for sure. Clearly I would like to see it above its current levels around $1,100 per ounce. It would be great to have a $1,200 to $1,300 gold price, and that would certainly stimulate lots of investment. Personally, I think it's somewhere between the $1,100 to $1,200 range would be a very good price.
So how important to the market is China for both gold and copper?
I'll speak for gold because I probably know it better than the base metals. China is important. I think other emerging economies are just as important. India as well. There's demand and supply, and I think gold will, in some form, will always be the traditional safe haven for investment, and certainly the market is there for for that demand.
And if we just go back to copper prices for a moment, with copper prices at 6-year lows, when does it become unprofitable to mine?
It's a very good question. I think every company has its own cost structure, and obviously their ability to insulate themselves against that cost and what it costs to mine. And then there's other mechanisms. Companies may at a particular time high grade mines rather than treat lower grade material. So it's very much dependent on the company in question.
All right, there are a lot of miners who've said that they'll start cutting jobs if this continues. Is this something that will accelerate?
I think that's it's been evident that jobs and cost cost cutting is certainly an aspect of the business, and many companies have taken measures to reduce their costs and remain profitable for their shareholders. I think that's prudent. I think that's something that's been necessitated by the commodity price falls. And it's an unfortunate nature of the business at times that people will lose their jobs.
Mark Connelly in Perth, thanks very much for being with us.